Sell now. I'm your host, Steve Van Metre, and thanks for joining me today. In our show today, the worst 2 weeks for the stock market is about to hit right now. And I'm going to show you what you need to do. This is why we're looking at the technicals, momentum, machine positioning, and most important, liquidity. And if you're wondering what we're doing at Typhoon Lagoon, my second home, well, when there's a liquidity crisis coming, you go to the one place where there's tons of it. Let's over to Goldman, where we picked today's story up with a headline from their tactical flow of funds, the Cannonball Train update. It's coming. And here they note on Monday was their most replied to email of 2023. They're saying changes are coming fast. Fade the green, which means, hey, the market's up, it's green. They're saying, look, it's time to get out. The market technical flow of funds have seen a significant deterioration heading into, get this, the worst 2-week liquid period of the year. They say it's time for a thread. Really, it's time to reposition here. Let's take a look at how the machines are going to handle this, because one thing that's important about machines is they are trend following, not trend establishing. So if all of a sudden momentum starts shifting to the downside, well, the machines are going to look to lock in their gains and sell in a big way. Let's take a look at what they're about to do. Over the next week, they're looking to sell $21 billion in global equities, nothing in the S&P, but check this out. In a down tape, $62 billion in global equities, which isn't terribly huge. It's a solid number, and only $6 billion in the S&P. But if the market continues to go down, look at this flat tape, $37 billion to sell with $3 billion to buy in the S&P. But how about this? In a down tape, $283 billion in global equities, $77 billion of the S&P. That's going to drive the tape down in a big way. And there's your thresholds on the short term: 4444 on the S&P, medium term 4260, long term 4240. You start to see those levels break. The machines are going to sell. Of course, this is why we have our own report on the machine positioning to give you an advanced look of where they're headed. But it's not just the CTAs that could be sellers here. There are other programs like this one, the volatility control strategies. And the way these works is when volatility goes down, they buy more stocks. So if we see a liquidity move where there's all of a sudden a spike in the VIX, well, they're going to sell too. They estimate that these strategies are in their 99th percentile, means they loaded up on stocks at tune of 173 billion. That means probably nothing. No, it means everything. It means everybody's on the long side of this market. And if liquidity drains and you start to see a material shift, you're going to get program selling followed by a whole bunch of other people selling. And this is the opportunity to try to lock in those gains that you've made before things go the other way. The bottom line from Goldman is August liquidity will likely deteriorate quickly. The largest bears in the room have capitulated. Vacation schedules are starting to pick up, and we've seen a massive amount of passive index buying of equities given the Rhino recession and name only tape from target date funds, 401k plans, and 529s. He said this happens every third quarter in August. It's typically the largest month of the year for outflows as allocations are full, orderly profit taking near 4600. So again, look for a move down here in the market, and many of you have made some gains. We've shown you on our show exactly how to trade some of these things. So it's time to lock that in, because let's look at now TD Securities, and we're going to see the same thing over and over here. Is the machines are maxed out. They're all in. They're not buying anymore because they've done it. And if there is any buying, it's such a small amount. Look, under 4,400, they become sellers, and all of a sudden there's your tidal wave. Your economic tsunami is coming. Let's take a look here at the momentum on the S&P 500. As we do every week, we like to look at the broad equity market, the bond market, we like gold, the dollar. Of course, we've got an update on platinum as well. We're going to show you how to do some recovery trades today. But more importantly, I want you to know we added something new to the slides today, and that's a stop loss level for good reason. It's time to cash in. Here you can see momentum now has shifted to negative on the S&P. Remember, we've been talking about just how much momentum has been pushing to the upside. The RSI is at 48. That's still positive, but it's slowing. MACD's got a negative cross. Momentum Timer Pro, this is our own proprietary report that aggregates a bunch of different technical signals, smooths them out. It's got 2 consecutive daily sell signals. Now remember, up until this, it had like 30 something or more. You can go back if you're a subscriber and look, and we told you it was maxed out on the 1 month window, the 3 month window, the 6 month window, and when you get to those extreme levels, you're going to see a reversal, and that you can see a link in the description for that below. And our CTA-Timer Pro already leading the market to the downside. Our subscribers have noted that, hey, thanks for the update ahead of time. We've already started taking some profits, so we give you that look ahead. Again, links to the description in both. Their CTA is $30 a month, a great bargain. So we've got our buy it open at 404.09 back on March 30th. Tal saying set your stop loss at 432.88. Friday's closing at 446.81. And next upside target unchanged. Downside target, now you'll notice they revised this down quite a bit. Let's take a look at the charts and I'll show you why we moved it down to 413. All right, here is the S&P 500, symbol SPY. You have this beautiful bottom here. You've got your left shoulder, another left shoulder, a head, a right shoulder, a neckline. And if you measure this like some of my friends do, well, it tells you the market should go way up here. But there's one challenge with this. You'll notice we ran into this supply zone, and you can see there's been sellers between these 2 purple lines. Sellers. Now, what has happened here is people have bought up in this zone, and they're not convinced the stock market's going higher because the market went down after they bought, and they've been waiting to get back close to even. They're looking to sell here. We've revised our downside target back to the neckline. If you get a pullback all the way down to here, this is a reload and buy level. You can see momentum on the RSI, on the MACD, rolling over and heading lower, but the tremendous amount of support starts right here around this 413 level. So that's our next downside target. And if you see these machines selling, that is a real possibility. Let's take a look at tech stocks. We got QQQ, momentum, no surprise, also negative. RSI is at 48 as well. MACD, negative cross. Momentum Timer Pro, 3 consecutive daily sell signals. Again, this was the same story as the S&P. It had like 30 or 40 some consecutive daily buy signals. It was off the charts. We were maxed out and still maxed out on the 1, 3, and 6 month windows. And we told you, when this flips, that means you need to start selling, taking in profits. Our Momentum Timer Pro nailed that, as did our CTA-Timer Pro. Our Machine Mimic is ahead of those programs saying, look, it's time to cash in, time to pull in some profits here, raise those stop losses. Remember, we had to buy it open at 315.24, now saying set your stops at 359.24 as Friday's close at 372.04, and revising our downside target now, 347.79. Let's take a look at why we're revising it down so much lower. 347, that puts you right down into this zone here. Now you'll notice this has been an active support, not a whole lot of support, but a little bit of support right in here. So our downside target is going to be right in this zone, 347, maybe a little bit lower here. But again, you have a beautiful bottom and you have a very unprecedented rally. Our CTA-Timer Pro told you to buy down here, told you to buy again in here, is now telling you it's time to take some profits. We're advising you, put your stop loss on wherever you're comfortable, but look for a move. If this comes down and holds support back down in here after all the selling, that would be a bullish case. That would be come back in, take some of those profits and load back up. Again, you see momentum sharply moving now to the downside. Don't fight the tape, let it roll. And now let's take a look at the bond market. Now, many of you have been asking questions about this. What's going on with the bond market, Steve? And so we need to talk about this because I want to teach you about recovery trades today and show you what happens if you don't use a stop loss and the market moves against you. A lot of people don't. We encourage you to, but there's ways to get around that. I'll show you that. Let's take a look. Again, no update from Goldman other than the fact that if there is any material move higher in or lower in yields, the machines are buying. We can now establish after the move last week, the machines are max short, which I can show you here. TD Securities, they're not selling anymore. They are maxed out. They are only buying, and they have to get down yields on the 10-year under 3.8%, that being unchanged. I will tell you that number will go higher if this does not trigger in the near future, and the machines will protect those short positions if they can. How about Metre? Well, they're painting their chart pretty much red, saying everything's max short across all windows, across almost every government bond. So that tells you they're max short as well. And we've been talking about this rectangle pattern. Now let's take a closer look here, because we're talking about this Wyckoff pattern. And to me, it looked like this is what we're seeing. Now, it is possible this is the spring, that this may be that final move lower, because it did break support. It is possible. Now, one of the challenges with trading, anytime you're trading, are you trading on a macro level, a micro level? Where are you at? In the weekly, the daily, the monthly? What is your time scale? And when you look at an inverted yield curve and you're trading the bond market, you have to look out a bit further. And so this, to me, looks like a VAR shot, where all of a sudden the news just caused a massive amount of triggered selling and it exhausted itself. We'll see what happened, because Friday we saw yields fall. We'll see how this goes. But let's talk about how you recover from this, because that's the important thing. So let's take a look here. We got TLT momentum, obviously negative. RSI is now in oversold territory. Now, as a trader, this is what you're looking for, is starting to see these signals here. MACD, you've got a negative cross. Momentum Timer Pro, 7 consecutive daily sell signals. Now, I do want to note, we put out a watch list twice a week to both of our subscribers on the CTA and MTP. We have given you the list of things to look at. If this is not on the top of your list as a bond market, as a trader, it should be. I'm going to make the case. We still have our buy it open at 106.88. So let's say we did not use a stop loss and I didn't list one, so we didn't. And now we're down at 96.53. Maybe you're fretting over your trade. How do you recover this? I'm going to show you how you dollar cost average to the upside to try to reduce that, and maybe you blast through 106.88 and you make a huge gain. Maybe you get somewhere near there and tap out and say you've had enough. Downside target, 93.81. Upside target, I move that down 99.30. Here, our machine positioning also confirming max short. We see our Momentum Timer Pro, 7 consecutive daily sell signals. So the way you're trading this, if you're a subscriber, is you're looking for this to flip on the fast side. You're looking for this to go from a minus 100% to something else. You're looking for one of these daily signals to start to switch. That's what you want to see. And let's take a look at TLT here, because if liquidity goes on the equity side, you can probably guess yields are coming down. So here we have this big rectangle pattern. We have this breakthrough that support level. Let's zoom now into the 1-year chart. You can clearly see the support levels were right between these two dotted green lines, and it broke down, and then buyers came in. And what's interesting here is this was not just daily, it was in the overnight trade. Typically, mainly you saw during the Asian markets, these gap down move. We know that gaps get filled. Now, if you like trading gaps, one thing is important to note here, TLT just filled this open gap way down here. And that's interesting. Here you see oversold territory. Here you can see MACD kind of trying to bottom out. If you get a rally here, look for one of those signals on CTA or MTP, depending on which you're signed up for. And if you haven't yet, it's $30 a month for CTA, and you get a 30-day trial. So you can sign up, you pay, you don't like it, we'll refund your money. Just let us know in writing within the first 30 days. And this rally moves up and it triggers, you're going to buy into the rally, dollar cost average from that 106 position. And if it continues to break through and move higher, then what we can expect is you'll have some nice profits here. What we should expect is a rally up in here to this zone here, which was support, now resistance. I pull back from there. And then if it takes off, that confirms the Wyckoff pattern is complete. And if not, well, then you've got a recovery trade to work yourself through. Let's talk about gold, because everyone's bullish on gold except, well, me. And buying above 1950 on the CTAs. Here we can see that broke on Friday, the latest data I had here. So that should be buyers. Selling below 1900. And we can note there was a triple top. And many of you said that doesn't matter. It's still bullish. Well, it's not bullish at all. But nevertheless, momentum remains positive. Remember, we're talking about trading gold, not owning the physical metal. Look, if you own physical metal for other purposes, that's great. We're talking about it as a trade. RSI 47, MACD negative negative cross. Momentum Timer Pro, 4 consecutive daily sell signals. Upside target unchanged, downside target revised to 176.36. Here you can see our CTA program. It's just sitting at kind of a 35% long. Nothing exciting. We're seeing Momentum Timer Pro kind of oscillating between the buys and the sells. Let's take a look deeper here at what's going on with GLD, and then we'll look at gold futures as well. And what we can see here is it kind of rallied up here. It crossed the 50-day moving average, but notably the moving average is moving to the downside. It rolled over. It failed there. Look at where the volume profile line is here on this 6-month chart. It tells you sellers are above here. That's the risk, is a rally into this, another rejection, and then you're headed all the way down here to that 176 level where you're looking for support, and beneath that you've got some open gaps to fill, telling us that gold could likely go lower. And let's see it. You see the same effect here on gold futures, rallying right into that volume profile there. Sellers obviously sitting above this, buyers below. The only question is, in a market that loses liquidity, sellers remain dominant. All right, let's take a look next at, of course, that double top in gold miners, which is usually and historically more frequently a continuation pattern, but right now it looks pretty bearish. And we see momentum is negative. RSI getting near that oversold territory, below 40. It's at 41 right now. MACD's got a negative cross. Momentum Timer Pro, 4 consecutive daily sell signals, and I'm going to tell you, without liquidity, GDX is headed lower. I know a lot of people super bullish. I'm going to tell you where you want to load up on this. Friday's closing 29.56, downside target. This is where I think we're headed, 26.62. CTAs here now would be selling on this position as of Friday. Would make perfect sense. We see momentum shifting to the downside, 4 consecutive days there. Let's take a look at GDX, see what we have going on. And sure enough, here's that double top. Let's zoom out to the 1-year chart, and there's your, remember, this is interesting. When it bounced here and it formed this top, I said, it would be interesting if it came back down here and formed a right shoulder. And boy, many of you said that's not going to happen. Here's your left shoulder. Here's your head. Here's your right shoulder forming. You can see it. It's sitting right here on the 1-year volume profile. It's picking up some buyers here. If this doesn't hold, all the way down 26.62 or is right where, if it hits there and holds and bounces, that's where you want to be a big buyer. Let's look at the 6-month window. You can see sellers right above, suggesting the downside risk to GDX. And remember, miners lead the metal, so where they go, the big yellow metal follows. Let's take a look at the dollar, because this could be a help to gold. It might need all the help it can get. Momentum remains positive on the dollar. We'll look at UUP and DXY. RSI is at 55. MACD, you got your positive cross. We told you our Momentum Timer Pro. Remember when this was max short and everyone's like, oh, there goes the dollar. I said, nope, it's going to reverse. Well, sure enough, it did. You see that. Upside target, I think, has a slightly revised to 28.62. Actually, you know what? I think it's the same. Downside target, 27.74. That's unchanged as well. But regardless of the technicals, I still think broadly, from a macro perspective, dollar's getting weaker here. Let's zoom out to the 1-year chart, and you can see it's just sitting right above its 200-day moving average, and it continues to struggle. Made a high here, and the next high was a little bit lower. Next high is a little bit lower. It's sitting right there. Sellers clearly right above there. If this rolls over, you're headed all the way down here into the $27 range. That's where I think the likely path is. Let's take a look at DXY. Same story, but different moving averages, running right into that 100-day, that blue line moving average, kind of rolling over. If that breaks, let's zoom out to the 2-year chart. You're talking dollar around 98, and given the demand for dollars in the global economy, I would say that makes sense as you look at the trade reports. All right, let's talk about platinum. Here's another recovery trade. Now remember, no report will get every signal right, but what we do note is our CTA report gets a far more than 50% of them right. And from a trading perspective, that's why so many people tell me, I've canceled all my other subscriptions. This is my only one now. Momentum is negative. RSI is at 41. MACD's got a negative cross. 4 consecutive daily sell signals. Remember, we had to buy it open. 89.36. Time to play recovery, because I said no, and this is no stop loss. Here we go. Friday's closing 86.50. Upside target is a 50-day moving average. Downside at 82.72. Let's take a look here. We see the CTAs would be sellers here in the short term, but let's see from a price chart if there's a potential to trade this up. Now remember, depending on which report you have, the CTA or MTP, you're going to wait for a signal reversal. So check this out. It came up and hit the 50-day moving average, got rejected, bounced down. Now remember, our entry point was at 89.36. So that's up here. Now what happens if you see this hold support, and you can notice it does hold this level frequently, the next rally tends to be up here in the mid 90s. So what you want to do, and you'll notice it came down, made a low, now made a higher potential low. If it rallies off here and you see the CTA report flip or the MTP report pick up some signals on the buy side, you want to buy into this, start dollar cost averaging that original trade, and then see where it goes and raise your stop loss level up. And that, my friends, is how you do a recovery trade. So keep in mind that going forward, if you find yourself in a position that just isn't right, you don't have to get crushed by the big wave in the background. Just dive under it, look for the next opportunity, and you can get through it. And remember, try to always use stop losses. But look, I get it. Not everyone does all the time, and that's why it's a great opportunity now to learn how to recover that, because when liquidity strikes, I believe it's going to create a bunch of opportunities, and I want you to hold on to as much of your gains as possible so you can catch the next rally. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.